the Dogecoin developer, stated on Twitter that since COVID-19 cases are declining, people should only be concerned about the impending global recession and nuclear apocalypse. Elon Musk remarked that it would be better if we went an entire year without experiencing any form of horrible global event. The Tesla owner's Silicon Valley Twitter page then joined the discussion and questioned Musk on how long he believed the recession would last, to which Musk replied, until spring of 24. Given that the International Monetary Fund has already stated that it expects the growth will decrease from 3.4% last year to 2.9% this year, this seems likely, in Musk's words. Prepare for the worst. Tesla stock's past year wasn't exactly an overperformance, and Musk's forecast of an impending recession should be taken seriously. His company, alongside the whole auto industry, already felt the recession pressures as they had to drop vehicle prices over the last few months significantly to spur demand. In one of the recent earnings calls, Musk conveyed his opinion that the United States is still in a better position than China and Europe. His comment was, North America's in pretty good health. A little bit of that is raising interest rates more than they should, but I think they'll eventually realize that and bring back down again. Indeed, China is now experiencing a housing crash alongside a severe financial crisis. On the other hand, Europe's economy is still being wrecked by high energy costs. Last year, the cost of their energy bills even caused many people to protest. The rescue plan doesn't appear to be all sunshine and rainbows for the approaching years either. One of the most important warnings that Elon Musk gave investors was to avoid investing on margin. He emphasized multiple times that people can get crushed in a volatile stock market if they're having margin loans. Elon commented, if there's mass panic in the stock market, then you've got to really be careful about margin debt. Higher interest rates reduce people's purchasing power and borrowing capacity. This tends to slow down the economy as a whole and confronts inflation as people cut back on their spending and can't afford more expensive purchases with debt. On top of that, higher rates stimulate savings behavior as people get much more yield on bonds, money market funds, or other cash equivalent investments. According to Musk, the U.S. economy is due for a recession following a 14-year bull run. Talking about the car industry, Musk added that demand will be good despite probably a contraction in the automotive market as a whole. As we recently saw, Tesla implemented single and even double-digit price reductions on its models. The company's profit margins have been partially sacrificed for volume and market share. Elon emphasized the need for the Federal Reserve Bank to use extreme caution while deciding how to address the rate hikes. He also tweeted suggesting to drop the Fed funds rate 0.25% and 0.5% on different occasions. With recession on the horizon, it makes perfect sense as to why Tesla chose to cut 10% of its salaried staff. You may recall Stanley Druckenmiller's remarks about the bear market rebound that occurred in July 2022. His forecast came true. He made a lot of money on his trades last year, and the market experienced a dead cat bounce. That sounds like a new warning to us now that he's made the same cautionary point about how 2023 might witness a bigger recession. According to Musk, the current financial crisis could be on par with conditions of 2009. Musk's warning and Cathie Wood's statement go hand in hand. This is her tweet from December 7, 2022. The bond market seems to be signaling that the Fed is making a serious mistake. At negative 80 basis points, as measured by the 10-year versus 2-year Treasury yields, the yield curve is more inverted now than at any time since the early 80s when double-digit inflation was entrenched. She has been heard making comments about how the Fed operates on lagging indicators and doesn't see the bigger picture going forward. Cathie added, typically an inverted yield curve is pointing to a recession and or lower than expected inflation than expected. In our view, deflation is a much bigger risk than inflation. Commodity prices and massive retail discounts are corroborating this point of view. Musk himself came across the tweet on December 9th and added, absolutely. In October 2022, Jamie Dimon, the chief executive officer of J.P. Morgan Chase, has been observed expressing his opinion that the impending recession will be a very major problem. although he believes that customers will be in a lot better position than during 2008-2009, which contradicts Musk's opinion and his warning he is still moving in a parallel direction. Similar to Elon Musk, he has issued a recessionary warning. He commented, "I mean, Europe is already in recession, and they're likely to put the U.S. in some kind of recession 6 to 9 months from now. In a matter of seconds, the situation can go from very mild to quite hard," according to Diamond. He also referred to what's coming as an economic hurricane and said to brace yourself. As promised, we'll provide you with some of the best recommendations Musk has to offer before the video ends. During his appearance on the All In podcast, Elon advised to keep powder dry, referring to a solid cash reserve, and to stay away from margin debt, as we discussed earlier. For business owners, heeding that warning and cutting fat from the company before a recession starts is a good idea. That's exactly what Elon Musk notably did himself at Tesla. He also said that when you have a boom that goes on for too long, it starts raining money on fools.